Can the used car market come back from this? Yeah, sales are down. We're seeing wholesales at the auctions are going down, prices are reducing. And a lot of times when dealerships are bringing their cars in to try to unload them at the auction, a lot of people are not buying. Other dealers are not interested. They can't unload their inventory that they currently have. And I've done some analysis here. I had a quick look here over some black book here, and I actually see some pretty significant staggering numbers. And first of all, I want to start off by saying, yes, sales are down. Prices are down. Sales are down for almost every niche in the used car segment. Why is that happening? Well, we can kind of spend a little more time talking about that here shortly, but the long and short of it is incentives for new sales. We see the new cars are now impinging on the space of the used cars. Of course, a lot of these deals are really pushing hard incentives on a new vehicle. But if you've got a used vehicle that's 1 or 2 years old, maybe marginal miles on it, now you have a scenario where it's actually fighting for space with that new vehicle that's got heavy incentives on it. And even, you look at a vehicle that might be, say, for example, like a Toyota, brand new might be $39,995. But Joe Blow, because their retail and their particular their value retention on a Toyota, you might be looking at a 2-year-old with, 20,000 miles on it, and that owner might be trying to sell it, or the dealer might be trying to resell it. At 36, 37,000 might be a couple grand, $3,000-$4,000 less than the brand new one. And where normally traditionally that would have been made sense to do. The problem is now with all these heavy incentives, there's a lot of cars that are incentivized to the point where people are just, no, it makes more sense to buy brand new. The finance rates are way better, generally speaking. I mean, you're in anywhere from 0% APR, of course, for brand new, anywhere from 0% up to, 6.9% on the outskirts, on the absolute top end of the spectrum. But when you're looking at used, a lot of the used vehicles, finance rates are 12, 13, 14%, subprime up well over 20%, but that's another story. So you're fighting with interest charges. And of course, the new vehicles, they're throwing in extras now. They're incentivizing it. They're even knocking prices off MSRP. So that 2 or 3 year old Toyota was probably purchased at a higher number. And so now that person's trying to get out of it. But the reality is now this brand new one might be incentivized, might be eating into that differential on top of it with the better interest rates. A lot of people are making the decision, you know what, why would I buy a 2-year-old, maybe a 3-year-old used car if I can just get the brand new one at all? I mean, we know used sales and new sales are both down. New sales are really suffering right now. Obviously, the massive inventory that's piling up on the lots, vehicles are not going. They're not moving like, a lot of OEMs would like them to do. I mean, there are some exceptions. Toyotas, Hondas, Lexus have always been fairly short volumes. So they generally show up and they leave. So there's a lot of other manufacturers outside of those three that are struggling with sales. But as they push harder because of the poor sales on the new industry, they keep bearing down with bigger incentives, better finance rates, and they're changing almost weekly. When you look at some of these deals on a weekly basis, you're seeing, what was 0% on 48 months is now 0% on 60 months. This is happening almost on a week-by-week basis. It's a very exciting time as a buyer, and it's becoming a buyer's market, both on the new and the used side. On the used side, you're definitely going to be starting to see some more inventory. Now, as I already said, why sales seem to be slumping a little bit on the used side is because of the heavy incentives. Will that ever change? I don't know if that's going to change anytime soon. I mean, it might be a matter of a few years again. We're going through the ebbs and swells, but realistically, at the end of the day, yeah, private market sales, vehicles that are 10 or 15 years old are sort of free game. They're always out there. Always, there's always opportunity for somebody to get a great discount on that. But those types of vehicles are usually quite mild out. We're talking something in that, the higher end spectrum, the 1, 2, 3, even honestly 4 or 5 year old vehicles are still considered relatively late model. Some of them have warranty. And so those are battling with the new car sales and the inventories. But here, let's take a quick look and we'll check the black book here. And we've got some statistics. So week over week wholesale price changes. And we saw basically back at the end of 23, so December of 23, we saw a massive dip. And we knew that. At the end of the year, people are buying, Christmas gifts and things like that. It's a busy time of year for friends and family, and people are not really thinking about buying cars. But that's usually where you get your best deal, where everybody's out shuffling, buying gifts and presents. That's probably your best option. But as we look, the sales has slowly come back, since the new year. It's slowly risen back up to a point where we sort of hit some of the holiday season. And now, if you look at the latest, we're seeing some big dips. And the big dips seem to be coming in the way of the trucks. The truck market and full-size SUVs seem to be taking a bigger dip than most. And we know that. That's on the used sector. That's on the new sector. The new, they're pitching, again, big incentives. The used are taking a bit of a hit. Who wants to buy, a 9-year-old Ram or a Ford F-150 that's rusted out? It's got 180,000 miles on it. It's bent rims on. I mean, a lot of people don't want that because a lot of trucks are used for hard duty. And now we're starting to see it. People are opting more the highly incentivized brand new vehicles. And if you look at that chart, we're seeing the dip. We're seeing the drop here. Actually, this year, we're seeing a pretty significant dip already in truck and full-size SUV sales. Now, we go to another chart here. We're talking weekly change. A little more time sensitive, I guess, because more weekly. Let's break this down. Pretty much every single sector has taken a hit. And let's just take it from the top. Subcompacts, they're down 0.38%. So down about $43. That doesn't sound like a lot, right? But this is weekly, remember, weekly. And this has been going on for a significant amount of time. So if you think on a subcompact car, used car that might be $15,000, if you're knocking $50 off this week and $40 and then $30 and then $40, and this goes on for weeks on weeks, and think about in 6 months, now all of a sudden you might be $1,000 off. That's a bit of a discount from an average transaction price of, 15,000 might be more like 13, 14,000. So we're seeing a pretty significant shift and prices are dropping. We're also seeing compact cars down 0.42%, mid-size 0.16%. Full-size cars, not a surprise. Not a lot of them out there, and they're becoming less and less popular. I was driving down the road the other day, and I was counting this whole barrage of vehicles that were coming the opposite direction as me. And I could literally say they were either all trucks or all SUVs. And I would say probably 70% SUVs, 25% were trucks, and another 5% were cars, small cars, mid-sized cars. Cars are not popular, and as a result, their efforts are pretty much dying year over year, month over month. We're seeing it. So they're down about $180 or 0.81%, so almost 1% down just in this last week alone. We also heard about Chevy Malibu, gone. I don't know why they do that, because that was actually their second best seller for Chevy, if you can believe it. The sales weren't slumped, but you know what? I guess they're trying to put all their money into the EV space. Then we talk about near luxury cars, $49 down at 0.17. Luxury is down about 1/3%, about $117 down. Prestige, $143 or about 1/4% almost. Sporty cars, they had a pretty good hold. And I mentioned this on a video recently too, where we were looking around and some of the sporty cars, specialty cars, the Nissan 370Zs, Porsche 911s. I mean, you could go down that avenue and talk about a million different cars, but the specialty cars, the cars that aren't really needed, it's not a necessity, down 0.11%, or only $33. And then $77 down or 0.1% on a premium sports car. So overall, down. But more telling are trucks and SUVs and vans. Let's talk about some of those, because those ones have seen the biggest hits. And the only one, and I talked about this on a recent video too, the only ones that seem to be holding are the compact vans, the very small minivans that people love to haul their family around in, because it's, instead of people buying those expensive SUVs, now people were like sort of gravitating more to the Toyota Siennas and the Honda minivans, even the Chryslers and all those minivans that are out on the market. People were more gravitating to those as SUV prices start to rise. People are looking for options. So the minivan is actually up $120 or about 0.6% up. And that's on a weekly change too. But the rest, I mean, the big hits here, I don't want to run down through all of them. Full-size trucks, one of the biggest hits, $354 or down about 1.04%. Just in this 1 week. So they're down, I mean, you might as well round it up, call it almost $500 in 1 week. And then another one that's kind of a big ugly is the mid-size luxury crossovers and SUVs. I give you BMW X6, for example. I mean, there's a ton of different combinations. Those are down pretty significantly too, about $510 down at 1.17%. And other ones that are pretty hard, compact luxury crossovers, same thing, 348 down or 1.14%. There's some pretty big hits here, and what I would say the general consensus is they're all down. So trucks, SUVs, all of those other than minivans are all down a significant amount of money. Remember, this is 1 week's numbers, but this is a phenomenon that's going on and on. So what does this mean? This means a lot of good things. As prices are dropping on the used car segment, if you're priced out of the new car segment, like me, I'm rocking my old 03 Ram. I love that. I look at this and I'd probably be more inclined to look at a quality late model, slightly used truck or SUV rather than buying something brand new, because even though incentives are good, I'd be more inclined to see what I can come up with, maybe pay some more cash, bigger down payment, and maybe get myself a better vehicle, maybe with 50, 60, 70, 80,000 miles on it. That's well looked after, might be a better vehicle to buy from a cost perspective. So it looks very positive for people looking at buying used cars, because the used car sales are down, but that's destroying a lot of these used car corner lots. These dealers that are they're not selling them on the lot, so they're trying to pump them through the auction. The auctions aren't really selling them that quickly, and we're just seeing this natural settling and softening of the used car segment, which is good for the buyer, terrible for the dealers. But then we look at another one, average retail listing price. And we're seeing the Black Book here, and we're seeing some pretty big drops. Up, I would say, looks like back in kind of summer of 23, we peaked up and it looked like it was probably close to 39,000, 38,500 for the average retail listing price of a used vehicle in Canada. US side, quite a bit less. Obviously, we're thinking about 70% of what the Canadian dollar is. And I find very similar trends. The market trends are very similar. The specific numbers are a little bit off, but the general trends are the same, and very much for the same reasons. People generally were hungry to buy cars. So back last year, people were spending a lot more money. It drove prices up, and we saw that. August, September, we saw prices peak around 39 grand. But now, as you look this time of year, we're way down to about $34,000. So the average transaction price on the used car segment has dropped about $5,000 in, well, it's not even a year. It's probably about 7 or 8 months. A clear indication that people are just done. Either they're stretched beyond capacity, they don't have the money, they're broke. Of course, the incentives on new are pushing people away, obviously, or pulling people away from the used segment. So there's a combination of different storms going on here, but at the end of the day, the used car segment is dropping like a rock. And this might be a great opportunity to start sniffing around for looking for that used car. If you don't want to spend for that brand new one, there's definitely great opportunities to buy in the used car segment. Now, used car vehicles come with pitfalls. Obviously, watch for wrecked, damage history. Definitely want to get your Carfax, get a pre-purchase inspection done at the dealership. They're going to check it, make sure the brakes are good, it's not burning oil, that the vehicle runs and drives well. So get those two things, Carfax and PPI. Take it for a good test drive yourself. And as well, just make sure that you've done your research on insurance costs, as well as, general maintenance, what they look like for that type of vehicle. Do that little bit of research, and you're guaranteed to line yourself a phenomenal deal on the used car segment and save yourself a ton of money. With all of that said, right there, check it out. What's going on with Stellantis? They are going down hard, and the CEO's telling all about their future plans. Hope to see each and every one of you on the next one. See you real soon. Bye-bye.